Hello there, it's Mark Sebastian, the founder of OptionPit.com, and this is the Stock Market Option Volatility Report. Reminder, this is for education purpose only. Shouldn't be considered investment options have risk. So, hey, our portfolio management using options for investors, money managers, and registered investment advisors has 12 CE credit hours with it. Continue to add. You need 30 as a CFP, and so this covers almost half of it. And it's something that you want to learn anyway. So if you're CFP and you're looking for continuing ed hours, this is a great chance to check it out. Speaking of continuing ed, the market continues to educate us on not going up. As you can see, things are a little ugly today. We're down nicely. The VIX is up. The spikes is up. VIX is up. VXN is now over 20. Well, what's going on? Well, Elizabeth Warren just threatened to break up Amazon, Facebook, Google, and to a lesser extent, Apple. And then, which I'm sure everybody is super excited about. And then the economy, the jobs numbers stunk, which people don't like. And you've got Europe in a recession. So, as I look around, if you're wondering why is the Fed slowing down rates, I continue to think it's not a U.S. problem. I think it is a Europe and a China problem that is creating the growth issue. I think the U.S. appears to be doing fine right now. China appears to be pretty much bludgeoned by our trade war. And Europe is a structural nightmare and thus unable to grow. So the way I see things, with Europe and China not able to do anything with their interest rates, it kind of hog-ties the Fed to staying pretty stable. I don't know that we're going to lower rates. The Fed may have to lower rates if Europe starts lowering rates. So things to think about is that, these economies are not, they're not on an island anymore. We're not just North America or United States. The global economy, all the central banks are interconnected, unfortunately. I don't think it's a great thing that we're interconnected to China, but we are. So with this nice VIX pop, I want you to know VVIX is now 93. So VIX options are getting pretty darn juicy. So what does that mean? That means there are some interesting setups being created, certainly on the upside. Those looking to hedge, there's some really interesting trades I can make in March. And those looking to fade, again, also some interesting trades. I'm going to be looking at, I want to point out Costco. Costco blew the doors off of earnings last night. It's up 4%, mostly because of me and the fact that I buy all of my dog food and groceries and cocktail sauce. The amount of cocktail sauce I consume from Costco is pretty phenomenal, folks. So anyway, I like Costco. I think it could go to 230, 240. With how good their earnings were, this is going to be one we are definitely going to be looking at. Remember, it was not that long ago that Costco was, trading as high as like 230 less than 3 months ago. And in the last year, it's been into the 240s. So pretty nice change in path for Costco. We may be setting something up with that. So on the whole, that's kind of what I'm going to be looking at and watching. We may look at TLT and oil again. Those have been, TLT's been stronger, down a little bit today. USO, oil vol, this is one Andrew and I have been talking about for a couple of days. Oil vol is dirt cheap. So this is kind of what our game plan is for the day, and we're looking forward to executing it. All right, folks, if you want to sign up for our 12-part masterclass, it's great for individual investors. Definitely great for certified financial planners. Go to optionpit.com/masterria. You got questions, you can email me, mark@optionpit.com, or call me 888-TRADE-01. Have a good one.